Hey guys, welcome back to Mitchell Markets. Today we are taking a simple look into JD.com, one of the cheapest major tech stocks in the market right now, and we're going to walk through 5 core valuation metrics that I'm using to judge whether the stock is undervalued or overvalued. So we are going to be going over PE, forward PE, PEG, PS, and EV/EBITDA, long one. And then after this, we're going to discuss what happens when your options expire in the money, but they do not have intrinsic value, and how you can still profit off of that and not get concerned that you have lost intrinsic value on the position but are still in the money. It can be a confusing time to navigate, but also leads to opportunity to make consistent cash flow. We are going to be discussing JD's PE, price to earnings ratio. It is at 8.66, which essentially means investors are paying 8.66 dollars or $8.50 for every dollar of earnings that JD has. And for a PE of 8.66, this has a rating of 9 out of 10. It is a very strong PE ratio. Next, we are going to be looking at the forward PE of JD. JD comes in around 8.15, and this looks at expected profits for next year. When forward PE is lower than current PE, it usually means earnings are expected to rise. So it's another strong number, another 9 out of 10. Now we are going to be looking at one that a lot of people actually miss or jump over, and that is going to be PEG, or PEG, price to earnings to growth. And JD's PEG range is between 0.90 to 1.30 depending on what metrics and data you're using. And under 1 is undervalue, around 1 is pretty fair. And JD's PEG isn't perfect, but it is somewhat in that fairly valued range. So it is not a huge alarm, but could be better. So JD is somewhere in the middle. And this is mostly because margins are still on the thinner side and logistics are still expensive. So I would give this in the 6 to 7 range. Now the fourth metric that we're going to be looking at is price to sales. JD's trading at 0.25 times sales. That means every dollar of JD revenue value is at just 25 cents, and that is extremely undervalued. So this is going to be a 10 out of 10. Now we will be looking at the EV to EBITDA, and this compares the total value of the company to its core operating earnings. And JD sits around 5.6, which is very low for a business with JD's scale and infrastructure, and that will be another 9 out of 10. And you may be asking why JD is still having a slow path upwards, and it has nothing to do with the fundamentals of the company. It's completely the sentiment and a lot of investors being weary of Chinese economy and consumer spending. And because of this sentiment drop on JD, it is allowing retail investors to get in at good valuations and good prices and expecting future growth in 2026. Now we are going to be talking about my JD option positions and what I might do if it expires in the money but has no intrinsic value. A lot of traders misunderstand this part, and I'm going to explain it in a way that is easy to understand. So if my calls finish above the strike but by a small margin, the option is considered IT. There may be almost no value left in the contract. In that situation, I may choose to let assignment happen and allow the shares to be called, because if there's no intrinsic value left, there's usually no extra premium to capture. So letting the shares get taken can sometimes be a clean way to reset the position. And if I get assigned and I want back into JD, I can simply re-enter or sell puts again if I want exposure at a better price. So I'm not committed to running a full wheel strategy, but I may use wheel logic in this specific situation if the option expires in the money but there's no meaningful value left in the contract position. So certain companies can work very well with a mix of wheel strategy with a long-term outlook. Because even if you get assigned on the contract, you can sell puts for profit and have it set as a strike where you would completely make any intrinsic value back and then some from selling the put positions. So that's my evaluation breakdown on JD, why it looks cheap, why it's falling, and what I may do if my option expires in the money without intrinsic value. And if you want more clear breakdowns like this, make sure to subscribe and comment, and I'll look into whatever stock that you list below. So that is my update on JD. I know I had made a video a few weeks ago, so just keeping you and the Mitchell Market team updated on my current positions.